Welcome to Swayam BHU course on Fundamentals of Economics and Financial Markets. Myself, Dr. Anand Singh, and in this video, today I will discuss with all of you regarding the pricing of securities. That means we will discuss in detail regarding how the prices of the securities are determined. Now, under this particular topic, we will discuss regarding 6 major key points. The first key point is concerned with how pricing of the securities was done prior to the establishment of SEBI. All of us knows that SEBI was established in 1992. But in India, we have capital markets right from 1875. That means in this particular video, in this particular segment, we will discuss regarding how pricing was done from 1875 onwards till the establishment of SEBI, how the pricing was done. Then in the second segment, we will discuss regarding when SEBI was established and in what circumstances the government decided to establish SEBI. In the third segment, we will discuss regarding the concept of free pricing era. In this particular segment, we will discuss what is the meaning of free pricing era and why the government or why SEBI was compelled to basically start the procedure related with free pricing. In the fourth segment, we will discuss regarding the meaning of fixed price method. What is fixed price method and what are the necessary things which must be disclosed by the company under this method. In the fifth segment of today's video, we will discuss regarding the concept of book building method. That means under this particular thing, we will discuss regarding what is the meaning of book building method and what are the important things which must be done by the company if they are going for book building method. And in the last segment of today's video, we will discuss regarding the key timelines or the key time periods which must be followed by the company while entering the primary market. Now, let us start this particular video. The first segment, pricing of securities. How pricing of securities is done. That means how the prices of the securities are determined. That means suppose a company is going to float its securities in the market, then initially for the first time how the prices of the securities are determined. All of us knows that on stock markets listing is done. Now at the time of listing there is a specific price of the securities. The company is not deciding the prices over the stock markets. There is already a price and upon which either at the specific price or at a price lower than that price or at a price which is higher than that price, the securities are listed over the stock markets. But in this segment, we will discuss regarding how the initial prices of the securities are determined. Now, all of you knows that SEBI came into existence after passing the SEBI Act 1992. Government of India passed SEBI Act 1992 and SEBI was established. Soon after its establishment, SEBI became the market regulatory body. But prior to the establishment of SEBI, how the pricing of securities was done. Now, in this particular segment, we will discuss regarding the pricing of securities which was done in our capital markets or in our, especially the primary market between the period of 1875 till 1947. How pricing was done. Now, the first stock market which was established in our country, that was the Native Shares and Stock Brokers Association. Nowadays, that stock market is popularly known as Bombay Stock Exchange, BSE. That means BSE was established in 1875 and its official name was Native Shares and Stock Brokers Association. Now, in the year 1875 and onwards till 1947, the pricing of the securities, especially in the primary market, was completely regulated by or completely it was dominated by the brokers. The Brokers Association used to determine about the exact prices of the securities. Now, prior to 1947, there were basically two types of Brokers Association, or all the stock markets, they were basically of two important categories. That is, point number one, voluntary association of persons. There were large number of stock markets in our country which comes under voluntary association of persons, or they were a kind of voluntary association of persons. Now, for example, Bombay Stock Exchange was there. It comes under voluntary association of persons. Now, the second type of stock markets where the company is limited by guarantee. For example, Hyderabad Stock Exchange, which was established in 1942. Now, both these associations, whether it was voluntary association of persons, or it was company limited by guarantee. Both type of stock markets they used to control. They were having full control over the determination of securities of prices. They used to determine the prices of the securities by their own. Now, in 1947, when we got independence, then the government of India passed Capital Issues Control Act 1947. Now, as and when the Capital Issues Control Act 1947 was passed by the government, the CCI office, that means the Controller of Capital Issues Office, became the main regulatory body of our Indian financial system from 1947 onwards. That means prior to 1947, the pricing was basically done by the Brokers Association or by the brokers or by the company itself. But after independence, when the Capital Issues Control Act 1947 was passed by the government in 1947, and when the CCI office, that is Controller of Capital Issues Office, became the market regulatory body, then from 1947 onwards, CCI office used to determine the prices of the securities. It was the whole sole body. It used to supervise the functioning of all the companies, and this particular office, that is CCI office, used to determine the prices of the securities. Now, CCI office used to allow the companies to offer their securities to different categories of investors at different prices. That means whether a company will offer its securities in the primary market or not, it was to be decided by the CCI office. CCI office used to grant a specific price to the companies, and it used to grant permission to the companies that you are permitted to float your securities in the primary market. After taking approval from CCI office only, the companies were permitted to float their securities in the primary market. Otherwise, no company was permitted to float their securities. Further, when the pricing was done by the CCI office, then differential pricing was also done. That means CCI office used to decide about different prices for different types of investors. For example, suppose there are retail investors, there are non-institutional investors, there are employees of the company itself. Then CCI office used to determine separate prices for different investors which were concerned with a company. That means two things were clear. First, CCI office used to grant permission to the companies whether they are going to float their securities in the market or not. And point number two, CCI office used to determine differential prices. That means different prices for different investment groups. It was also done by the CCI office itself. Now, CCI office was whole sole responsible for the overall functioning of the capital markets prior to 1992. That means between the era of 1947 till 1992, CCI office was the market regulatory body, and it was responsible for the whole sole supervision of or whole sole functioning of the capital markets. Now, let us discuss regarding one point, that how, on what basis the CCI office used to determine the prices, because there must be certain basis. On what parameters, on what basis CCI office used to grant separate prices, or on what basis the CCI office used to determine the prices of the securities. Basically, there were large number of parameters which were analyzed by the officers of CCI office, and after analyzing all the facts, all the parameters related to a company, CCI office used to grant a specific price or differential price for different investors. Some of the important parameters were: point number one, the most important parameter was market capitalization value of the company. That means CCI office used to see that what is the market capitalization value of the company, whether it is a big company or whether it is a small company, or what is its exact market capitalization value. It was basically determined by the CCI office, the officers of the CCI office. Then second parameter was what is the amount or volume of profits earned by the company. It was supposed that the company might be working in the ground. Then in that case, if a company is already working and it is willing to offer its securities or fresh securities in the market, then in that condition CCI office used to determine what was the level of profits that were earned by the company during the last few years. Suppose if the company was new, then the CCI office used to determine about the fact that what are the profit earning capacity or what is the possibility of earning profits by this particular firm in a future date. On the basis of possibilities or on the basis of profit earning capacity of the business firm, also CCI office used to determine the prices. Some other parameters were the promoters of the company. CCI office basically used to look after the various promoters. What kind of promoters were there? What is the net worth capital of the promoters? Whether they are high net worth individuals or not. All such parameters were basically considered by the CCI office. Then goodwill of the company. It was also a very important factor or parameter which was considered by the CCI office. What is the goodwill of the company? It was also properly analyzed by the CCI office. Then what is the volume of fund that is basically required by the company? That means the company which has decided to offer its securities in the market, then what is the actual volume of fund? What is the total amount of fund that the company is expecting to raise from the market? That volume of fund was also an important parameter which was basically analyzed by the CCI office. And after analyzing the total volume of fund that is required by the company from the market, it used to grant a specific price. Then debt equity ratio, it was also one of the very important factor while considering or while deciding the prices of the securities. Especially a ratio was given in the Act of 1947, that is Capital Issues Control Act 1947. The debt equity ratio was placed as 2:1. That means for every equity, there must be a maximum of 2 debts. Any figure which was higher than 2:1 ratio of debt equity, it was not considered as a good sign for the company. That means in that particular condition, valuation of their securities was done at lower side. But if the debt equity ratio of a company was less than 2:1 or 2:1, then it was considered to be good and valuation of the securities was done at a higher prices by the CCI officers. So the CCI office on the basis of all these parameters used to decide about the prices of the securities. Now, why CCI office was abolished? Now, all of us knows that SEBI Act 1992 was passed in the year 1992 and it became the market regulatory body. But there was already a market regulatory body, that was CCI office, and it was also established by passing a Capital Issues Control Act of 1947. So when there was already a regulatory body for our financial system, then why the government of India felt it necessary to abolish the previous one, that means CCI office, and why a new controller or new regulator, that was SEBI, was established? Now, basically CCI office was abolished because of the following 2 main reasons. Point number 1, large number of complaints were regularly filed by the investors to the government against the CCI office. They used to claim that CCI office is not working properly or large number of malpractices are going on in CCI office. Since large number of complaints on regular basis were filed by the investors to the government, so the government decided to constitute an inquiry committee against the working pattern of CCI office. This was one of the main reason. The second problem which was concerned with CCI office was regarding the pricing of securities. Most of the investors, they complained to the government that the procedure adopted for pricing of the securities, which was adopted by the CCI office, that was inappropriate. That was not good. So large number of companies and the investors themselves, they were not satisfied with the prices which was granted by CCI office to the companies. So because of these 2 basic reasons, the government of India initially established Securities and Exchange Board of India, that is SEBI, in 1988 itself. But in 1988, SEBI was basically established as an interim administrative body which was directly working under the Ministry of Finance. One of the main reasons behind the establishment of SEBI in 1988 was to inquire regarding the working pattern of CCI office. government wanted to look after that whether all the complaints which are filed by the company or which are filed by the investor themselves, whether those complaints are true in nature or not. So the government of India established SEBI as an interim administrative body. Now, when SEBI just inquired the matter and submitted its report, on the recommendation of SEBI, the government of India decided to abolish the CCI office in the year 1992. Now, let us discuss regarding the SEBI Act 1992. So, when or on the recommendations of SEBI, which was established in 1988, it submitted its report in 1991-1992. Now, on the recommendations of this particular committee, Government of India decided to abolish the Capital Issues Control Act 1947. So, in 1992, the Capital Issues Control Act 1947 was repealed by the government. Now, since the act was repealed, so the organization which was established on the basis of that particular act, that is CCI office, the Controller of Capital Issues Office, which was the regulatory body, it was also repealed or it was also dissolved. That particular organization was dissolved. Now, as and when the Capital Issues Control Act 1947 was repealed, the Government of India passed a new act, that was SEBI Act 1992. Now, after passing SEBI Act 1992, the body which was established from this particular act, that was SEBI, that is Securities and Exchange Board of India. Now, after the establishment of SEBI, it became the market regulatory body of our country. Now, SEBI was basically established with a twofold objective in mind. The two most important objectives were, point number one, to safeguard the interest of the investors. It was the primary objective of the government behind the establishment of SEBI, that this particular organization will safeguard the interest of the investors. And the second important objective was that it will frame rules and regulations so that the financial markets, especially the capital markets, it will function smoothly in our country. So SEBI was established because of these two important objectives. Number one, to safeguard the interest of investors, and number two, for the proper functioning or smooth functioning of the financial markets in our country. Now, soon after its establishment, that means in the year 1992, after its establishment, SEBI started free pricing era. Now, we will discuss in detail what is the meaning of free pricing era and why government or why SEBI passed this particular decision related with free pricing era. Now, what is free pricing? SEBI, after its establishment, clarifies that now from today onwards, that means after the establishment of SEBI, SEBI is not going to interfere in the pricing matter. That means SEBI is not going to interfere that how the prices of the securities will be determined, which was earlier done by the CCI office, because CCI office used to determine the prices, and thereafter large number of controversy was there. So SEBI, it decided not to interfere in the matters related with pricing, and SEBI clarifies that from today onwards, that means from 1992 onwards, the pricing of securities shall be completely under the hands of the company itself. That means SEBI clearly notifies that now the companies are completely free to determine the prices of their securities by their own. Now, since the SEBI, it completely free or it allows the companies to determine their prices by their own, that's why this particular mechanism or this particular methodology was known as, or it was popularly known as, free pricing era, because the companies were completely free to determine the prices of their securities by their own. SEBI clearly notifies that it is not going to interfere in the matters related with pricing of securities. Now, SEBI although started the free pricing era, but SEBI suggested two important methods, and SEBI clearly stated that the companies are supposed to adopt any one method. That means it was compulsory for the companies to select any one method. Now, what were those two methods? Those two methods were, number one, fixed price method, and second method was book building method. That means it was clear that the companies are completely free to determine the prices of their securities by their own, but they are supposed to adopt any one method from book building method or fixed price method. Now let us discuss in detail regarding both these methods. First method, that is fixed price method. Now suppose any company had selected fixed price method in order to determine the prices of its own securities, then according to this particular method or according to the norms of SEBI, the company was supposed to disclose two important things in its prospectus. That means if a company was selecting fixed price method, then it was supposed to disclose two important things in its prospectus. Those two things were, point number one, what is the exact price of the securities? That means the company has to clearly specify the exact price. Suppose rupees 10, rupees 11, rupees 15 and etc. What is the exact price or what is the fixed price which the company is willing to take from the investors against each security? It was to be specified under the prospectus. The second thing which was to be specified was the total number of securities which the company is offering in the primary market. So company which was adopting fixed price method, it was supposed to disclose the following two things. Number one, fixed prices of the securities and the total number of securities to be floated in the market. Now, according to SEBI norms or as per the regulations of SEBI, it was compulsory that at least 90% of the securities must be subscribed by the investors at that specified price or at that fixed price. If less than 90% of the securities are subscribed, then the entire process shall be regarded as void. So under this particular method, it was compulsory that at least 90% of the securities are subscribed by the investors on that fixed price which was fixed by the company itself. Now the second method, which is known as book building method. Now the book building method is basically known as price discovery method. Why? Because under this particular method, the exact prices or fixed prices are not disclosed. But if a company is adopting book building method in order to determine the prices of its securities, then it has to disclose two important things in the prospectus. Those two things are, number one, the total number of securities which the company is going to float in the market, that was to be disclosed in the prospectus, and number two, the price range of securities or the maximum and minimum limit of the prices of the securities. That means under book building method, exact price was not revealed by the company. In fact, a price range was revealed by the company. That means maximum and minimum limits were given by the company, and on the basis of market supply and demand forces, a specific price between that particular range was to be decided. So under book building method, the two things which the company was supposed to disclose in their prospectus was, point number one, the total number of securities to be floated by the company in the market, and point number two, the price range of the securities. Also, now here I would like to specify one more thing, the price range. Now as per the SEBI regulations, the maximum difference between both the limits, that means maximum and minimum limit, should not exceed 20%. That means the price range should be between 20%. For example, suppose the minimum price under book building method was quoted at rupees 100. So the maximum price should not go beyond 120 because 20% of 100 is 20. So maximum limit should not be more than 120. That means if the minimum price is 100, then automatic the maximum prices should not go beyond 120. That is the difference between the inner limit and the external limit. That means the minimum limit and maximum limit should not exceed 20%. So such a range was basically specified by the companies, or it was to be specified by the companies if the company is going for book building method. Now, under book building method, there are certain important things also. Now, let us discuss regarding those things. Now, if a company is going for book building method, then it was compulsory for the companies to appoint a BRLM. BRLM basically stands for Book Runner Lead Manager, and BRLM is basically a category 1 merchant banker which is registered with SEBI, or who is registered with SEBI. So a category 1 merchant banker was to be appointed, or it is compulsory for the companies to appoint a category 1 merchant banker who shall be known as BRLM in order to handle the entire procedure of book building method. Now second one is the minimum duration for which book building method shall be open, that was 3 days. That means the book building method must be opened for a minimum period of 3 days, and the maximum period is specified at 7 days. That means the book building process might be adopted by a company or for a period of 3 to 7 days. However, suppose there is a condition if the securities are not subscribed, because here also in this particular method also 90% subscription within that particular price range must be subscribed by the investors, otherwise the entire process shall be regarded as void. So in this condition, there is an option given by SEBI. Suppose the securities are not subscribed by the investors, 90% securities are not subscribed, then additional 3 days might be given by SEBI to such kind of companies. That means besides 7 days, additional 3 days might be given by SEBI to such kind of companies. In that manner, it is compulsory for the company to revise their price band for availing the facility of 3 additional days. So in order to avail the 3 additional days, it is compulsory for the company to revise its price band. That means there will be new prices band for which the company will offer its securities in the market for another 3 days. Now it is compulsory for the BRLM, that means Book Runner Lead Manager, to specify the exact price at the end of each day, and all the investors, they are completely free to make necessary changes in their bidding procedure. They are permitted to make necessary changes in their prices. At the same time, they are also permitted to make necessary changes in the number of securities bidded by them or quoted by them. But at the end of the 3rd day, suppose if the minimum duration, or suppose a company has, or it has opened its offer for 3 days only, then at the end of final day, the BRLM must disclose the final prices at which the securities are going to be offered in the market. Now, in the last segment of today's video, let us discuss regarding the important timelines. The first important timeline is when the prospectus is going to be issued. So according to SEBI, the prospectus must be issued by a company at least 5 days before when the securities are actually offered by the company in the market. That means at that day when the investors are permitted to make investments or they can subscribe the securities, from that specific opening of the securities, at least 5 days before, prospectus must be issued by the company. Now, regarding fixed price method, suppose a company has adopted fixed price method in order to determine the prices of its securities, then the minimum number of days should be 3 and the maximum number of days should be 10. So the company may decide for any duration between 3 to 10 days. Now, suppose a company has adopted book building method, then the minimum number of days is 3 and maximum number of days is 7. Initially it is 7, but in a condition when the securities are not subscribed, then additional 3 days might be given by SEBI. But in that condition, it is compulsory for the company to revise its price range, because under book building, specific prices are not given. Prices are going to be determined. Now, thereafter, suppose whether the company has adopted book building method or it has adopted the fixed price method, after successful issue, that means when 90% of the securities or more than 90% of the securities are subscribed by the company, then the company will, or the company may apply for listing purpose. And the listing norms are basically governed by CLA, that is Central Listing Authority. Now it is compulsory for CLA to give proper permission, or whether it is permitting the company or whether it is rejecting the application form, but proper instruction must be given by CLA within a period of 30 days. Now, in the next video, I will be discussing with all of you regarding the SEBI guidelines on public issues. Now, in that particular video, I will be discussing with all of you regarding 5 major key points. Those key points are: point number 1, what are the different kinds of issues? Then point number 2, what is the meaning of public issue? Point number 3, what are the important SEBI guidelines which are concerned with unlisted companies? Then point number 4, what are the important SEBI guidelines related to listed companies? And in the last segment of that video, I will be discussing with all of you regarding what are the important SEBI guidelines which are given by SEBI for listed and unlisted companies. That means all kind of companies who fails to fulfill certain conditions. So very thank you for watching this video.